I do think the world would be a better place if governments had more checks on their monetary policy and, being tied.
It's just grind up.
Yeah,
basically.
That's what we hope for with Bitcoin. Yeah, you don't want to wake up tomorrow and have Bitcoin gone from 61K to $1 million per coin. That is a scary world. That's a very scary world. We'd like to, slow and steady wins the race. I think that will ultimately happen. We don't want to see those that means like collapse of governments and stuff that would lead to some jump like that. But I think there is a world where a scarce digital asset, Bitcoin, could be the...
What's up, guys? Bang, bang. Man, do I have a treat for you today. We have Alex Thorn, Head of Firmwide Research at Galaxy, here to join the podcast. In this conversation, we talk about Bitcoin, we talk about Bitcoin mining, we talk about the ETFs, the Ethereum ETF, what's going on in the regulatory world, talk a little bit about politics, go around the world to different nation states, and then we get into some of the problems that might be on the horizon, including tons of unlocks of tokens that are coming. Could be as much as $80 billion that could hurt your bags, so you better tune in to this. And then we talk about Galaxy, what they're doing, the different funds that they've been launching, what it's like to work with Mike Novogratz, and much, much more. I think you guys will really enjoy this conversation. So here is my episode with Alex Thorn. All right, guys, we've got an incredible conversation today, but I thought a great place to start is Bitcoin is American values?
I think
just codified?
Well, not only that, but I think that the features of the Bitcoin protocol, that they perpetuate values that are highly American. Think about self-sovereignty, free markets, capitalism, private property, right? I mean, Bitcoin is digital private property. It's sort of the first ever instantiation of digital scarcity. These are things that we believe in America. We believe in private property. It underpins our entire legal system, our entire markets. It's not just that we have the best capital markets because, the Wall Street is, good at trading. It's because of our private property laws. It's because you can credibly invest in America with a belief that it can't be arbitrarily taken from you. That's a legal system thing. Bitcoin really enforces that, frankly, in a much stronger way. But yeah, I think the whole argument about Bitcoin, in my mind, is one of individual freedom, of ownership, of sovereignty. These are like America's like one of the only countries in the world that at its core truly believes in these things. So I think there's a lot of overlap.
Now, does that mean that America is more likely to embrace it because we already understand the ideals and values? Or is it a thing where self-sovereignty is an American value, but the people in charge actually say, wait a second, if you guys are going to have self-sovereignty, if you're going to have the ability to not be censored or seized, et cetera, we don't like that.
Yeah.
And so does it almost counter balance?
There's definitely a tension. We don't have our government at any given moment isn't perfectly defending or supporting the core values of the American Revolution or the Bill of Rights or the Constitution, as I think they should be. But what I would say is, look, we have pole position to lead on Bitcoin in America. We already do lead on it. We've got the most hash rate. We got the most investment. All the biggest ETFs are here. I would venture to say we have the biggest cohort of intellectual mind share in the Bitcoin world in the United States. So we really just shouldn't screw that up. Whether or not we are going to screw it up, I think still remains to be seen. Part of the reason that I have this as one of my hobby horses is trying to convince policymakers that you can be pro-America and pro-Bitcoin, that you don't have to, that a vote for Bitcoin is not inherently anti-American or anti-dollar. I think that's also part of the unease that you hear.
Do people think that, though? Are there people who think a vote for Bitcoin is anti-American?
I mean, I saw Hillary Clinton say that the Bitcoin threatens the dollar. I think President Trump, when he was president, at one point said, I am not a fan of Bitcoin or cryptocurrencies because I like the dollar. I think that's easing. I think people understand that, for example, for electrical grids, Bitcoin mining, large flexible loads are very useful and helpful. So wait, maybe that's not bad. For money, maybe it's really good at not being seized, but it's not super private. It's trivial in some cases to trace, right? So maybe it isn't great for crime. Like, I think the dam is breaking on that. But there are plenty of people who still think that. Some of our most articulate critics, take Congressman Brad Sherman, he has this down as he absolutely says that it's anti-dollar and that thus it must be killed.
But I think that Trump, as an example, people are like, oh, he's flip-flopping, he's pandering, he's doing all this stuff. I almost look at it as just like, no, this is the natural progression that every Bitcoiner goes through. You start off, it's like, this is stupid, this is a scam, this is for crime, this is not going to work. Then it's like, okay, well, maybe I kind of sort of see this one possible use case, but everything else is stupid. And like, fast forward 5 years, and then you're like, I own Bitcoin, and here's all the good things about it. And so should we actually expect, not that the politicians are dumb or the politicians are, intentionally, lying to us or anything like that, but instead, like, they just started looking at it in the last 5 years. And so now we're getting to the point where you're going to see them start changing their mind, because it takes about, 5 years to get up to speed on it, learn, get familiar with it, talk to a bunch of people, and then finally it makes sense.
I think that's a possibility. I agree. I don't think everybody who didn't like it or doesn't like it is inherently against it. Obviously, President Trump, I think he's changed his mind. I think there's no doubt that it's political as well. It'll be, the extent to which there's a delta between his campaign words and if he's reelected, his policies remains to be seen. But I think it's reasonable. Everybody has to go through their own thing. I think it helps, 5 years ago when he said that, there weren't the biggest asset managers in the world with ETFs. The most loud research on Bitcoin mining said that it was going to consume all of the world's electricity by like 2022. Obviously, that did not happen. So there's been a maturation of how to think about Bitcoin, of data on Bitcoin, of the types of players that are involved in Bitcoin, that I think also makes it easier. Now,
as Bitcoin continues to be successful in a bottoms-up manner, we now are seeing corporations and balance sheets. We're seeing the financial institutions show up. Is it also something where like the messenger changes now? Nick Carter and I recently talked about the fact that like Larry Fink's a way better messenger than any of us, right? And so if Larry Fink says Bitcoin's a flight to quality, like, who cares what the Bitcoiners say, right? Because to a politician, Larry Fink saying that is exponentially more important for a whole host of reasons. And so have we now we can knock on the nation state doors because we have the financial organizations that are going to like do the bidding for us?
Yeah, it's like, walk or crawl, walk, run. I think also the game theory too now, right? I mean, the second BlackRock was kind of late to that game, right? Everybody else that ended up getting a Bitcoin ETF had already filed before, and then they showed up, and everybody, of course, was like, now we all have to do it again. What do they know, right? They're doing it, we've got to do it. And then you start seeing like, the same thing could be said for a nation state. I think the game theory is pretty simple. Like, you might not care, but if the United States adopts a national Bitcoin strategy, every ally and foe is going to also adopt one, right? So this starts, if it's just El Salvador today, and then maybe a couple other smaller dominoes fall, but like eventually, like it's pure competition. It doesn't matter if it's a national gravel strategy, right? People have to adopt it. So I think you're absolutely right. And, right, if it's just Michael Saylor, he's like a Bitcoin guy. You might be like, oh, he's that crazy Bitcoin CEO guy. That's not as convincing as Larry Fink. And then Jack Dorsey, you're like, well, he did build two companies that are really, really successful. And then you're like, okay, well, wait if it starts to be like, additional non-Bitcoin zealots.
Michael Dell now,
Dell,
is
exactly
rumored to potentially be one.
I mean, he retweeted Michael Saylor, right? And so he must be interested in Bitcoin. So I agree. The messengers help a lot. I mean, look, you had to do it all, though. You had to have, Antonopoulos by himself in that room in 2012. You've seen this video that always goes around of Andreas Antonopoulos explaining Bitcoin to like one person in a giant empty auditorium. Like, you had to do that. It's just, I think it's natural. It's part of Bitcoin's inevitability. And like, I really don't know a lot of people who really understand it. I almost know almost nobody who really understands Bitcoin that also hates it.
Now, when we look at whoever wins this presidential election, we got Trump and Biden both running as of right now. What should they do? Right, in terms of being supportive to Bitcoin mining, the crypto industry, you get to be president for a day. What would you do?
Oh man, if I had that type of God power, I don't think the president really doesn't have God powers, but let's just say that they did. I mean, you would want specific clarity at the regulatory agencies. I think in my mind, one of the most important is a clear definition of what is a digital commodity versus what is a digital security. Just start there would be a huge boon that lets businesses build in crypto and know like who their regulator is, when and why. But also overhaul things about guidance about when somebody is custodial versus non-custodial. So things like non-custodial software developers should never be they can't be responsible for the actions of their users. Right? Like whether that's a multi-custody or a self-custody wallet provider, or a smart contract that doesn't have any admin keys, right? Or a privacy preserving wallet that has no custody of the user's like funds, right? I think that's pretty much the end boss core question is like, I would look at rules to very specifically codify that developers of those tools can never be, Bank Secrecy Act, money transmitters, things like that. That's the bill that Elizabeth Warren has been proposing, that DAML, the Digital Asset Money Laundering Act, or Anti-Money Laundering Act, that classifies like software developers, like Bitcoin core developers, as having to register with FinCEN and comply with the Bank Secrecy Act. They don't have any ability to do that. That's like insane. So whatever you need to do to prevent that from happening, to me, that's the actual end boss. Everything else is sort of like regulatory clarity. As long as people can write and ship code and give it away for free on the internet and anyone can run it, like that's the core of what needs to be protected. They haven't really come after that much, but that plus general regulatory clarity on like who owns what. You can't have the CFTC saying that Ether is a commodity and the chair of the SEC refusing to confirm or deny whether or not it is. Like, that's insane.
We've been talking a lot about the United States.
Yeah.
Internationally, what's the next country you think to buy?
Ooh, man, like the next El Salvador?
Either buy Bitcoin, they can mine Bitcoin. Maybe they just become like very, supportive of Bitcoin.
Yeah. Well, I think there's some Middle Eastern countries that have some pretty sizable activities, particularly on the Bitcoin mining side. Think of some energy wealthy countries.
And they're public about it.
Yeah.
Right?
And then there's some, there's also some like South Central Asian countries that have large amounts of hydroelectric that mine. I think mining, especially in a lot of countries, have nationalized energy infrastructure. Well, I mean, if you have like piles of renewable energy, like rivers, which you can't turn off when you don't need, like you should just put something on it. That's why you dam them. That's why you generate electricity. All of that, I would say, then I start to think about the high inflation countries, right? So Argentina, Lebanon, Turkey. Now, this is tricky because it's a similar question about the dollar versus Bitcoin. Like, does the Turkish government want to defend the Turkish lira rather than create an exit valve? Probably, but to me, it's pretty straightforward. Like, they're not the world's reserve currency, so they don't have the special benefits that the U.S. does with its dollar. So maybe it makes sense. Certainly, we've seen uptick in usage by citizens in countries like that. I also think, in general, if you think of sort of non-aligned countries, countries that aren't like, definitively in the geopolitical camp of the U.S. and the West, or Russia and China, right? Some could make a lot of sense there. Countries that have gold reserves, I think you would see serious interest. I mean, I think of Bitcoin kind of as gold with wings. I mean, you ever try to send somebody any gold? It's basically impossible, right? The value to weight ratio is totally askew. Geopolitically neutral countries with inflation, countries with high energy, I think this is where you look, and I think you will start to see it.
And should we expect central banks or nation states to start to buy this for price exposure? Like, hey, Bitcoin's going to go up, so I want to own some? Or is it more of like a defensive tool? Right now you see China buying a lot of gold. Obviously, the United States kind of reaction to the Russian invasion of Ukraine. I think a lot of countries probably say, hey, wait a second, you can just take my assets. How do you think about, offense versus defense as to why some of these countries may participate?
I think sovereign wealth funds and affiliated funds are probably looking at price exposure primarily, but also uncensorability and, you could probably hold that inside your borders. That's pretty strong. Central banks or national reserve asset kind of thing is an interesting question. National countries in their reserves often have commodities. They have gold, they have oil. We have a strategic national oil reserve, right? In the United States. You could imagine it's reasonable to have Bitcoin. I would think more for use in international trade. The reality is the dollar is the most widely used fiat currency, but I would venture to say that Bitcoin is accessible in more nations than the dollar. It is truly global. It's obviously not nearly as big or liquid, but it's there. It's everywhere, whereas the dollar's not literally everywhere. And you could imagine, I think, in a world that becomes more fractured geopolitically, I think it's pretty fair to say we're in a relatively multipolar world today. I think it probably continues in that direction. And so you'd probably want something that's more neutral in general, available. It doesn't mean that it won't be the dollar, it won't be the renminbi, it won't be the some other fiat currency too. I don't think they go away, but I also think it should be this way. I don't think it's right that humanity is doomed to oscillate between one fiat currency printed out of thin air by one nation to the next every time there's a war. Like, we should be able to level up as a species. It's kind of like the game Civilization. I feel like, we really don't have a chance at becoming an planetary species until we figured out how to have money that's not in control of some bank in New York City.
Well, also, how do you just get the money to another planet? Probably is a difficulty too.
Do you really think they're going to be like calling down Elon, Elon Town, or Muskville in Mars, like when they need some cash, they're really going to call down to the New York Fed?
Well, did you see the blowback that he got? He basically was like, we're going to come up with the laws on Mars. And they were like, no, we can't let the billionaires get it, whatever. And I just remember being like, well, if you want to make the laws, like you get there first. Yeah. Beat them there, right? Like that's been the way the world's worked for thousands of years, right? If you get there first, you lay claim to the land, you get to make the rules.
It's so true. If you think of like, what's that phrase they always say, like born too late to explore the earth and too early to explore the stars. But at least I've got meme coins on Solana. No, I mean, when they land, it's interesting. I don't know. I think it's reasonable for everyone to think one way or another. If Christopher Columbus was sailing at the time under the mandate of the Spanish, I think, right? He'd gone to everyone for money, and I guess only they sent it. I mean, so technically he was claiming it for Spain. I'm not sure, but of course that all got super messy and eventually, and it was quite lawless. So I don't know. I think it's reasonable for whatever existing national powers or powers at all to say no. Like, if Elon goes, like he's going for NASA, technically they're his ships, but I mean, like, so we get to claim. But I mean, no matter whether they say that or not, it's going to be law of whoever's there. I mean, I don't think you can expect. There's a good show. What's that show on Apple TV about this? Basically, an alternate history of if the Soviets had landed on the moon first, and then it goes all the way forward through Mars, and a whole thing happens where it's like there's an American and a Russian and like even a North Korean in this future like enclave on Mars, and like they all follow their national things, but like sometimes they don't. It's like
you got to figure it out, right?
It's the frontier.
Is there a rate of return that Bitcoin could breach to the downside that would make it unattractive? So one of the reasons you said earlier, gold with wings, Bitcoin is digital gold, but it goes up, whatever these things are, the compound annual growth rate has been very high.
Yeah, it has like a
50 to 100%, depending on bull or bear market, when you look. If it only went up 20% a year, would some people not be interested? 15, 10, 5, 30? Like what is the down, side kind of breach point where it no longer has wings or is gold but goes up, and people would say, actually, it may not be worth the upside, for the risk that I'm taking? Yeah,
I mean, for sure. I think there is. If you think about like investing, if it's below the risk-free rate, that you get on T-bills, then I would say it's like anything that's lower than that, it wouldn't be good. I don't know what the number is. I think obviously I happen to have looked. I mean, you can pick the starting point for a compound annual growth rate at any point, but I just recently, like yesterday, pulled the 5-year rolling, and it was like 52%. That's great. 52% annualized CAGR over 5 years is an incredible return, right? But if you
beat every hedge fund.
Yeah. I mean, and honestly, I think it beat basically every crypto hedge fund. We have a database, Vision Track at Galaxy Research, that something like 300 plus crypto hedge funds provide performance information to. And literally a tiny handful have beaten Bitcoin since 23 started.
What percent do you think it is?
I think it's less than 10%.
Less than 10% of crypto hedge funds beat Bitcoin.
Yes. Since like the start of last year, which makes sense. I mean, a lot of, Bitcoin's up like from 16.5 to start 2023 to, we're correcting here a little bit, but that to 73,000, like that's a crazy return that, so look, but to your question.
What about over a longer period of time?
I don't know how much. I could guess. I would say,
maybe like 30% of them?
I would say not more than half. Definitely not. I mean, it's tough. You're going up against the big boss here. And
which I think maybe what's interesting about that is if you go to the public markets, definitely nowhere near 50% of the hedge funds beat the S&P every year. Right. So maybe there are 5-10% max, right? But probably closer to 5% or less. In crypto, actually, there may be a higher percentage that beat Bitcoin because they're investing in a new universe. There's more, opportunity, whatever. But you would expect over time that actually the crypto hedge fund landscape will look similar to the stock landscape because Bitcoin will continue to be that kind of that S&P, and these hedge funds will have a hard time beating it year after year.
I think that's right. I think also you're going to see more mainstreaming of blockchain rails. Like a crypto hedge fund may end up starting looking like a normal fund anyway. If you get treasuries on chain or equities on chain. I mean, people have talked about this forever. It's like remember like in 2016, it was like blockchain, not Bitcoin. The DTCC wrote this great paper about how they should be disintermediated by the blockchain, how stocks should be on the blockchain. It's a great ledger. So anyway, that also I think is finally starting to happen slowly, not like, not at single name equities, but you're seeing some fixed income securities. You're seeing some real estate actually trade on chain now. So I just mean for another reason that they could also start looking like normal hedge funds. But yeah, I think it's power law in the scheme of things, right? It's going to be, I don't think any of the big crypto hedge funds beat Bitcoin. So if we look by numbers, like count of funds that did, saying 10%, I bet like 5% or less of the total crypto hedge fund AUM actually outperformed Bitcoin. Yeah, the question is too, is that the index on crypto? I mean, I think it is. I think it's the prize asset, but I think there's a case to be made that it's something else, that like even Ether could be that on crypto because it has the applications that make up the broader ecosystem. Then again, Bitcoin may yet get those applications too.
Let's talk about altcoin market. One of the things that I think now people are starting to warm up to is this idea that, there's a lot of locked tokens that are going to quickly not be locked tokens, which would insinuate that some percentage of them are going to get sold. And so there's kind of this like wall of selling in the altcoin market that is on the way. And, I've looked at some of these coins. There's like 80% of the coins are still locked and are not going to be locked over the next 12 to 18 months. And so is it that simple? Like, coins get unlocked, everyone sells, prices go down, let's go home and go back to kind of the large caps.
Today's episode is brought to you by Espresso, the maker of the world's thinnest portable display. Now listen up. If you're like me, you feel like you are at a command center when you sit down at your desk. I got a gazillion tabs open and different windows for different activities. There's my web browser, my text messages, I have Slack open, and I got a Notes app. I normally work on a desktop and it can be very, very productive. But everything falls apart the second I leave my desk. If I'm traveling, if I go to a coffee shop to do some work, or just want to work from the kitchen table, my laptop doesn't have enough screen space. I lose my command center and my productivity falls off a cliff. It's a major problem. But this is where Espresso comes in. They have a portable screen that is so beautiful that you think Steve Jobs came back from the dead to create it. The thing is incredibly light, it comes with a nice stand, and the user interface is so easy that I figured out how to do it in less than 3 minutes. If you listen to this podcast, you know that's not an easy feat. So the Espresso team and I, we became friends. I got to know them because I really like the product. And those screens, they now want to offer them to any fan of the podcast. So we struck a little deal. Here's how it works. Anyone who listens to this podcast can go to us.espres.so, or that's too confusing, just go click the link in the description. If you go to Espresso's website, they've got a brand new offer there sitting for you. You get a little discount and you'll get a beautiful screen. Trust me, I use mine every day. You'll love the Espresso screen and I think it'll make you more productive. Go check them out today by clicking on the link in the description.
Yeah, it could be that simple. I think we did some research and found there's 80 billion of unlocking token supply between now and the end of 2026. So the next 2.5 years. And the entire crypto hedge fund market, like I was saying, is 20 billion AUM as of the end of March, according to our data. That's the entire market of funds that buy liquid cryptos. So there's 4 times that AUM coming, or that supply coming on. So I don't know who buys that. I think who is there to buy that wave? Well, the other thing would be like retail mania, but let's face it, I don't think retail is really here yet in crypto at all in this cycle. I mean, maybe buying Bitcoin ETFs. I think most of the Bitcoin ETF flow in the end, or the plurality, was probably people buying it in their IRAs and 401k brokerage windows and like on platforms. Advisors aren't even really here yet. So I don't think it was really them. Some of the independent advisors, sure. So, but that's, again, Bitcoin not the same, right? I think the performance of the Ether ETFs when they launch, which I think is probably in the next like week or two, will maybe give us more information about this. But again, that probably even further stratifies the market between, okay, now it's like Bitcoin and Ether, you could buy these in an ETF. For financial exposure to crypto, do you really need more than that? Probably gives you 80% of the narratives in crypto. Maybe not all the upside, certainly, but I think most people will start to just buy those two that further, holds back demand to buy the alts. So I don't know. I think it's a pretty unprecedented wave. I don't think people realize how much token supply, future token supply, was created in 21 and 22. And think about it. If you if you're an investor or a VC and you did a simple agreement for future tokens in 21, you might have had a 3-year lockup. Well, that's now, right? So I think it's pretty bad. I mean, I think that's a huge amount of dilution and supply for the market to absorb. And just based on the current market, I don't see like where that 80 billion is going to get bought. I don't think it's at these prices.
Is there anything that the founders, foundations, or kind of participants in these markets can do to lessen the blow of these unlocking tokens?
So I was thinking about, okay, what do we do in general? You've got the supply and demand side. So the supply side is your question. I mean, you could see you either stop the unlocks or change the tokens, right? And on the other side, you increase the size of the crypto hedge fund market. Well, we can work on that. I mean, we're in that market, right? So it's helping people raise, it's raising its cap intro, it's all that type of stuff on the buy side. On the supply side, yeah, you could see maybe like some token mergers. You could maybe see some DAOs or foundations, depending on what the situation is, like literally rework some of their token economics. You could see them maybe buy back tokens. To be clear, like there's plenty of issues with doing that. Like that's tricky, but I mean, that's the type of stuff we're talking about. Depending on how these unlocks actually exist, they may be immutable and you can't actually like not deliver. You may be contractually obligated to deliver, right? So it's maybe thinking creatively. I think this is something they should be thinking about because no matter how good your app is or your protocol is, like if you designed the economics such that the token's going to be like effectively down only for potentially till all of the supply is absorbed, like you're not going to have a good time. I think it also raises questions about how to organize these types of token sales in the first place. And I don't blame necessarily the protocols, projects, whomever we've got this, it's this, what they call the low float, high FDV problem, right? Where it's like, it's kind of like water on pavement, right? The ICO was highly egalitarian, but very few disclosures. And so plenty of scams went through that way. But the projects that did actually survive, think of like Ethereum, Cardano, Tezos, highly distributed token supply. It's actually, they look much better, but those were thought to be illegal securities offerings or unregistered securities offerings. So they went this private transitioning to first private and then maybe selling. So like the simple agreement. So the protocols that launched like 20, 21, 22, they all have much less dispersed supply, much more highly concentrated, which is bad, right, for those assets. I mean, and hard to solve. Again, that's reaction to the regulatory setup. Similarly, I think if we had a different a way to do different types of sales or distributions that was regulatorily compliant and obviously safe for consumers and all that, you might think of something different where, for example, like the foundation or the team, they only get one token for every one token that's airdropped to the user. And so like more users equal more airdrops, and then the team only gets funded as usage actually goes up. Because the other problem here, Anthony, is that a lot of the projects suck, right? So like, why should they have? Yeah, most, right? So why should they have a giant treasury and a bunch of millions of dollars or $100 million when their project failed or their company is bad, right? Somehow we want to try to figure out if you're going to do tokens as sales and things going forward, or as these assets that are tied to projects, which is a neutral term. I mean, we could say companies, I think, for a lot of them. Then obviously the value of the token, the full market value, should be somewhat tied to the success or failure of the thing, right? So thinking about ways to do that, I think one way that it, like, right, you can, if every new time a user onboards, they get airdropped a token, then one for one, maybe token and foundation. Not this like predetermined schedule where the investors get all of this locked for a period and the foundation gets this and the team, the contribution. Like that ends up with a bunch of people with tokens whose value is totally disconnected from the success or failure of the project.
I don't want to say who it is, but somebody recently came in here and were meeting, and they said to me, you know what? I think that actually token M&A is going to pick up, and we see a huge opportunity to go and basically create a token, and then use that to acquire the IP, the product, the user base, token holder base, etc., of these other tokens. And so we'll just give them some of our token. We'll take all their tokens. We'll burn them. We'll then get their users. Blah blah whatever. Is that going to happen? I
mean, that's one of the things I'm talking about when we say, like on the sell supply side, right? I said, talk to DAOs. You redesign tokenomics. I think mergers is possible. I don't know if it's like. I haven't thought about whether the way you do that is by creating a new token, raising for that, and then using that. You could do that. You could buy the DAO, buy influence with the DAO, or buy up the tokens, like a hostile takeover. Basically, you could do that for some of them. If the DAOs truly do control the thing, a lot of the DAOs are, decentralized in name only. They're like snapshot votes only. I think you could also just in general. I think straight up merging some would be a solution here. Does everything need a token? I mean, obviously the answer is no.
Yeah.
We know why a lot of them want one. Some of them do. Some of them have good reasons for existing. Many don't. Should collapse some of those together.
I think that makes sense. The Ether ETF looks like it's going to get approved in the next 2 weeks or so. How much money is going to flow into these things?
Yeah, we just sent our version of this report. We did this report for Bitcoin in October. I think we talked about this. And we said 15 billion in year one, 14.5 billion in year one would take us to $75,000 Bitcoin. Well, we're now at 15 in Bitcoin, but 14.5 did take us to 73.9. And so that for Bitcoin, that was
pretty good. That was pretty good analysis.
Yeah, although here's where we were wrong. We got to 14.5 totally not why we thought. We said that was the advisors would drive that. We got there without them. They're not here yet. So actually that's bullish, thankfully. So it makes us small. We won't finish the year with 14.5. We'll end up being lower. But yes, we
think we'll be lower than 14?
I'm saying, sorry, we will have been well low in our predictions. So we'll be much higher.
Yeah.
I don't know how high.
In the amount that went into the ETF.
Yeah, the net inflows into the Bitcoin ETFs in year one will be much more than the 14.5 we predicted. But that 14.5, we were right about the volume then flows to the spot price. So looking at the Ether ones, we didn't take the same approach. Instead, we said, I think this is what most people are now doing. I've seen a couple. Bitwise published one. Bernstein published one. The Bloomberg guys have some estimates. We're all kind of like now taking the empirical data we have from the Bitcoin ETFs and saying like, okay, how much less will it be? We all agree that it will be less at a minimum, just because it's proportionally market cap less. Ether's market cap's maybe a third of Bitcoin. So you think even if it's just as successful, a third is what it should be. We take it so we did some work. We come around to say it'll be about 30% of the Bitcoin flows over the first 5 months if we compare the two, which puts it up.
You think ETH is going to get this? I think 30%. This puts us,
yeah, so this puts us at the high end of what people have said. I've heard 10.
That sounds fucking insane.
I've heard 10. Look, here's the thing. It's a naive assumption. It's purely market cap weighted, right? There are plenty of reasons why it should be less. We get this.
Yeah.
One, I'll list some of them, and we list them. We just choose not. I can't really quantify them.
Yeah.
So we choose not to just like arbitrarily be like, and start with 30, but like cut it in half. Like it could be half for sure. No staking means that anyone in these ETFs is effectively getting like a 370 or 400 BIP additional fee. No marketing, right? I mean, there's GBTC ads all over the world in every airport. I haven't seen a single ETH ad, right? Because nobody thought this was going to happen. Not a 4-month drumbeat of like bullish telling the world that this was going to happen, right? Different time in the market too. I mean, Bitcoin ETFs came online like right when we were like, we're back. Like it felt aggressive, uplifting, right? Now we're kind of like in chop sideways for months, right? So plenty of reasons why it should. Also, in my mind, more complicated narrative.
Yeah, I think the narrative is the biggest problem.
Yeah, I don't know what it is.
One of the greatest mistakes that the people in the Ethereum community made, in my personal opinion, is they tried to do the ultrasound money stuff, and instead they should have just said Bitcoin is trying to be a sound money currency. We are trying to be something else, which is where it really started.
Yeah.
Right. And we're going to be the best general computer in the world. And here's all the use cases and all these things that you can do on top of it. We're laser focused on this use case. And I think that they would be much further ahead than they are now. But when you start to try to have 3, 4, 5 different narratives, if I talk to people in the institutional world today and I'm like, what is Ethereum? They actually will tell me different things. With Bitcoin, I don't get that, right? Bitcoin actually, like the Bitcoin community is now trying to add new narratives with like L2s and like all this kind of stuff. But really everyone agrees it's like it's store value.
Yeah.
And it's such a strong like meme or narrative that it works. Ethereum, they kind of have to like go back to the presentation deck, right? Like rework it, get the designers in there.
Yeah,
I've
heard internet bond, which is their ultrasound money idea because it has a risk-free rate from the staking rewards. I've heard World Computer was the original, which I like. That made sense to me. I call it, by the way, a general purpose blockchain, meaning not Bitcoin, basically something you can write arbitrary code on. Nobody knows what that means if I use that to sell it, right? If they say, and then you hear, I've heard the App Store, Bitcoin's digital gold, but Ethereum's the App Store. I'm like, I don't know what that means either, right? Yeah. I mean, so I agree. I mean, look, to be clear, like the 30% is just we're saying this is the market cap weighted. The real juice in our report is that we actually, whatever it is, we think the correlation between inflows and like net inflows and Ether price appreciation will be higher because so Ether will be more price sensitive to the ETFs because there's much more inert or locked supply on ETH than there is on Bitcoin. Sure, there's plenty of inactive supply, but that doesn't mean it's like stuck, right? Like on Bitcoin. On Ether, a third of it's staking right now, right? So like that definitely doesn't get unstaked and put in the ETFs because they don't get the staking rewards, right? There's another giant chunk that's in DeFi, right? It's collateral, sticky, right? So I think it's actually less liquid from a supply standpoint, probably on a net basis than Bitcoin. So there's whatever the flows are, could have a bigger impact, again, up or down theoretically. Like, I mean, there's a big chunk of ETH that's probably coming out, right? If GBDC is any indication. So as high as 30%. I mean, the other thing too, there's plenty of reasons, but we were so blown away. Like I said, our entire estimate for inflows was that advisors are the ones who need this product. You and I can buy on Coinbase or
it's all retail.
River.com, right? They didn't even come yet. So there was most of this was probably 20% of it was hedge funds and 80% of it was retail on like Fidelity, Schwab, TD, whatever, E-Trade, right? So I just don't want to like mid-curve this. I think it's possible.
I think that's boomer flows, by the way.
Yeah, maybe.
Right? It's finally my kid's been buying this on Coinbase. But now I don't have to go sign up for a Coinbase account. I just do it.
Or like people even our age, like millennials who've been working for a while, maybe they have it. Even if we already own like Bitcoin or crypto, whatever you like if, I already own Bitcoin, but like I've been working for 15 years. Like I have a 401k that I could never put Bitcoin in and now I can. Like there's a lot of money out there that I think that relates to. So I'm just saying like, I actually think also sentiment has turned so bearish on the net inflow predictions for the Ether ETFs for good reason. I listed some of them. I agree with all of those. I personally would, if I wanted to buy ETH, I would try to buy it and put it somewhere that's staking it. Like I wouldn't not do that. But I think people are, maybe they're just going to be surprised to the upside.
What number for inflows in the first month or 5 months or whatever, you would say this product failed?
Oh man.
It's not going to be zero.
No, I don't think so. Well, I don't know. The ETH is going to probably unwind half of it.
But let's just say that if $1 billion net inflow,
I think that's positive in 1 month or in 5
in a month or 6 months, whatever.
Yeah, I mean, I think that would be
compared to Bitcoin's 14 billion.
Yeah, so God, that's tricky. I think less than market cap weighted is reasonable. So like, less than a third of 14, so 4 or 5. I think like less than 5 can be seen as a disappointment because it's underperforming on a weighted basis. I don't think that's really fair because as we said, like these ETFs, think about like Bitcoin is a store of value. So storing it inert in an ETF, it's not as crazy a thing to do as taking this thing that powers all these apps, the App Store, and then just like not using it. It's like buying AWS credits and putting them in a vault and not using them on AWS. Like that's stupid. So it's a net worse product than the Bitcoin ETFs compared to the underlying. So it should be lower. I don't know. I'll just pick a number. 2 billion, less than 2 in a few months. I think is not a success.
Yeah, that's kind of where
the bar is pretty low for success, though. To this point, I think nobody. It's now you're looking at effectively unsophisticated crypto investors who want ETH exposure. If you're sophisticated, you would stake. You would try to stake, right? And you can do that at like retail exchanges. It's not like hard to stake ETH. So you're really looking at like capital that simply can't. Right.
What's going on with the Bitcoin L2s? I know that there's a lot of excitement. There's a lot of energy.
Yeah.
There's a lot of apps. It seems like every day somebody is pitching me Twitter DM, email, text, stopping me in the street, right? With I'm building this thing, whatever. Do any of them work?
I don't think any of them have really launched yet. These new ones, you have some code from some of them. There are some that I know the teams at that are good. I think the real thing that's strange is there's two big questions. One, who needs these, or what's the market for this? Right? Do we think that Bitcoin store of value people are like going to jump it? They didn't do the token trading or lend and borrow in the Ethereum world just because it was Ethereum related, but the second it's like Bitcoin adjacent or affiliated, they're going to go in. I don't think so at scale. So I think you're mostly competing with the other. It lets a new part of the Bitcoin ecosystem compete with Ethereum and Solana. And that is interesting to me. So long as it doesn't, screw up what makes the core of Bitcoin's value prop. And I don't think it will, but that's something it's reasonable to wonder if it will and be vigilant. The other question is, how are the rollups going to pay for the Bitcoin block space? It's expensive to post to Bitcoin, right? We're talking about using Bitcoin as a DA layer, a data availability layer. It's the most expensive block space often. Sometimes ETH is slightly more expensive for sure. Plenty of times it has been. It hasn't been recently, but they've altered the blockchain on Ether, particularly with proto-dank sharding, to make sure that it's not too expensive with all of the L2 posting going on there. We Bitcoiners have not done that, right? So, we're doing some research on this, but if you think that one or two, they each have to post maybe 200 to 400 kilobytes per block. There's about 4,000 kilobytes total available per block. Now you got, say, 3 post 400. Now that's 1.2 megabytes taken up in every single block. That's only like 2 or 3 of them. That's going to cause fees to be expensive on Bitcoin L1 for everyone, but also for them. It's the sequencers in a rollup collect the fees from their users, use that to pay for posting their data to Bitcoin or to the DA layer. How much usage are they going to need to generate the revenue to pay to post? How many of them can generate enough revenue to post? I think it's 2 or 3, not 65. We think there's 65 trying to launch.
So it's an interesting question of at what point is Bitcoin successful? Right now, I would say that it's got product market fit as a store of value. There's a lot of people who really wanted to be a medium of exchange. Questionable whether it has actually achieved product market fit there and worked. I would argue probably not actually, which may surprise people, but it's trying and there's at least a light at the end of the tunnel. You're like, okay, a couple things got to go right and there's a world. Unit of account obviously would be another big one. And then this settlement layer for all these L2s, et cetera.
Yeah.
If Bitcoin only becomes a global store of value and it occupies 1 to 5% of people's portfolio globally, is Bitcoin successful, or do you need these other use cases for it to kind of achieve, a degree of success where the Bitcoin community would be we did it. We did it, Joe.
That is a tough question. I think it doesn't need them. I think purely a digital gold asset would be a real achievement, because you're still able then to take your wealth out of a perpetually depreciating, inflating fiat system and store it in a digital scarce commodity, right? That is global, can be sent, stored, whatever, and has those properties. That's if it doesn't become money in the medium of exchange sense. If it doesn't become, if we don't achieve what some people call hyper Bitcoinization, I think the idea is it's hyperinflation, except it's the Bitcoinification process. I don't think it needs that to be successful.
Do we want that to happen? Right. I mean, there's this world where people used to always ask me, what happens if the power goes out?
Yeah.
Right. I'm like, dude, you're not going to want Bitcoin. You're going to want a gun.
Yeah. You're not going to want dollars either.
Right. You want a gun to protect yourself and your family.
Yeah.
If it is full on anarchy, there's no power in the United States.
Yeah.
I hope you know how to make food out in the woods.
It's always somebody that their whole financial life is operated through a fintech neobank that says that too. And you're you're not going to have any money either, bro.
Yeah. So I think that's one. But on the other hand, it is this weird world of hyperinflation is not fun.
No.
I've talked to people who have lived through it. They're I know one guy who literally said, I went to work one day and I calculated I was making 30 cents a month. I stopped going to work.
Yeah.
Right. And he's like, And all of my colleagues thought that basically I was like not fulfilling my duty of like going to work every day. And he was like, do you understand? They're not paying you.
Yeah.
Right. Like, we think we're getting paid. We're not getting paid anymore. Why are you going to work and not getting paid? And so this like hyperinflation narrative, which like, it sounds cool that Bitcoin's price, hyperinflates, but it only happens in a world that like, again, maybe I'm completely oblivious to some scenario, but it kind of sounds like there's just carnage everywhere. And that's not a world that we want.
Yeah, we don't want it to hyper Bitcoinize, right? Or we want it to be slow and steady adoption. I do think the world would be a better place if governments had more checks on their monetary policy and, being tied.
It's just grind up.
Yeah,
basically.
That's what we hope for with Bitcoin. Yeah, you don't want to wake up tomorrow and have Bitcoin gone from 61K to $1 million per coin. Mm-hmm. That is a scary world. That's a very scary world. We'd like to, slow and steady wins the race. I think that will ultimately happen. We don't want to see those that means like collapse of governments and stuff that would lead to some jump like that. But I think there is a world where governments, and in the case of our Federal Reserve is not part of the government, but the Federal Reserve, our central bank, is constrained by physical reality to some degree when they print money. I don't think that necessarily everyone's going to be spending Bitcoin, but I do see a world where a scarce digital asset, Bitcoin, could be the underlying reserve or a portion of it, somewhat akin to what Hal Finney suggested with his Bitcoin Banks post, which was more of a free banking idea that banks would issue their own paper, but it would be backed to some degree or not by Bitcoin, and that would help determine the face value of that paper. I think the era of just unchecked fiat currencies, like it just doesn't. I think they are pretty much guaranteed to fail forever. So like it just look, we can go through this for another 500 or 1,000 years. For all we know, we will. I hope we don't. I hope Bitcoin is something that gets us out of that. Wouldn't the French have loved to own Bitcoin? Or wouldn't they have loved to own the British pound? Wouldn't the British have loved to own the dollar if they knew, right? Mm-hmm. I'm pretty sure every fiat currency in history has been dethroned from the world reserve status, and every fiat currency has basically inflated to effectively zero compared to where it started. So like there's got to be some break in that chain, and I think Bitcoin could be that, but it doesn't mean that like we don't want to get it too quickly. And I think part of this would be a national Bitcoin strategy, like just hold some. The US government has been selling Bitcoin for like 15 years, right? Or 10 years, we should say, right? Tim Draper famously bought all that, some of the Silk Road Bitcoin.
30,000 or something.
I think I just saw one of our analysts said that they're moving coins on chain right now, the US government, right? Mm-hmm. So, I'm going to do them the favor of not calculating how much money they would have if they just kept that Bitcoin. But I think that's part of the way you start to do it in a more like orderly fashion. To me, every world reserve currency is destined to fail. You'd have to believe in the end of history to believe that that's not going to be true. So you may as well, like, shouldn't you hedge? And
no brainer.
Yeah, I hope we get there.
What are you guys doing at Galaxy? Galaxy is this like monolithic, Death Star down in
well, and it
Southern
is
Manhattan.
like our well, I'm not going to say what it is, but our Wi-Fi password is, or for guests, is a Star Wars reference, and it's called Galaxy because Novigrads love Star Wars. There's plenty of Star Wars art all over there. So yeah, I don't think of us as the Death Star. Like hopefully we're on the good side. Well, I guess in that one the Empire is bad and the terrorists are good in Star Wars, right? Whichever side we're on, I hope it's the winning one.
So what are you guys doing?
Well, I mean, we are just here, like still, right? I mean, when I started, like I thought of like DCG and Galaxy as the big competitors to each other, like that they both had trading and derivatives and lending and asset management and mining in some way and venture. Now, I think we stand clearly above them now, given what's happened at Genesis and the rest of DCG's sort of world. But I mean, I think we're the biggest derivatives shop now. We're a CFTC swap dealer, which you only you're required to do when you hit a certain amount of volume. I don't know if there are any others, so that's volume based. So I think we're the biggest. We didn't blow up. We just announced, I think, some interesting new partnerships. I don't know. We're just out here cruising, dude. It feels like
what are the partnerships?
So we just announced we're partnering with State Street to launch managed ETFs that include exposure to Bitcoin and ETH. So it would be equities, like right. But you have these ETFs now. So also those. So that's partners with Invesco, partners with State Street, like, working with basically some of the biggest asset managers in the world. It's like it feels to me, I was at Fidelity for 12 years before I came to Galaxy, and I love Fidelity. I still do. And I use Fidelity, by the way, for all of my TradFi stuff. But they didn't feel like the center. When I'm standing on the floor in Galaxy with my research team and the trading teams there are many centers, thankfully, in crypto. It's a decentralized global, market in addition to movement. But it feels like one of the true centers of what's going on. And so I don't know. Yeah, we're here and we're cooking, dude.
What's it like working with Mike Novogratz?
It's great. I mean, Mike is a brilliant trader. I think Stan Druckenmiller, in a Bloomberg piece about Mike a year ago, said, look, Mike's had his ups and downs, but this is a volatile market and he's still here. You can't be a trader for 20 years and survive without being good. But he is downtown Bitcoin Mike. That's how I think of him. Like, he is the Bitcoin guy in Lower Manhattan, like has been for a while. And dude, he's a funny guy. He's got great sense of fashion that you can both cheer on and ogle,
ridicule.
Yeah, he's fun, man. It's a fun place.
What is the biggest thing that people don't know about Galaxy that if they understood, they would get a sense of the culture, the team?
It's a young company. I'm probably in like the top decile of people there age wise, and I'm 38. So and everyone there, from the people who work on crypto VC or like trading cryptos, to the people in our back and middle office, right? HR and marketing and finance, like they all love crypto. Like, this is a company of people that came from traditional businesses, traditional finance, to work on crypto. This is a real it's a real thing for us, right? Like, same with me. Like, I can't go back to I did legal and compliance before I was into Bitcoin. I'm not going back to that, right? Like, we're all in. So and so are our employees.
Looking forward, I think people believe we're in a bull market. Seems to be that way. What are the big milestones you think we'll have hit before the end of this bull market?
Oh, yeah. I'm a little bleak for the next couple months. It's summer, volume's low. There's not a lot on the calendar, but I think the election's a major catalyst, one way or the other, potentially. I think before this cycle's over, I want to see Bitcoin in like at least the $200,000 range, just straight up. Like that, it doesn't feel... I think it's reasonable to say.
You think that's possible?
Yeah, I do. I think it is possible.
I don't think we're going to get there.
Well,
because the volatility gets so too
possible.
It's possible. Yeah, it's definitely possible.
We may not. I mean, I fear that we won't. I fear that like the diminishing returns of these cycles. But I also hope that we can stop talking about cycles one day. It shouldn't. I've seen this chart. I can't even figure out how people make this chart. I was talking about the global liquidity cycle.
The 4-year one, and lines up with the halving. That also lines up with every other 4-year thing.
Everything, yeah. It turns out it's like the Fibonacci number. I guess 4 years, every 4 years, the elections, and I would like Bitcoin to become more widely held and stable, so we don't have to like go through these ridiculous like situations. There's no reason that it should like. I mean, it's actually insane that it went from 69 to 16.5 to 69. Like, it should just like that. You should just hold right through that and never even know. You wouldn't even know. Didn't know FTX collapsed. Didn't know. BlockFi collapsed, didn't know that Luna collapsed. You wouldn't even know. You shouldn't have to know. Mm-hmm. Like, Bitcoin is not really related to the volatility that we've been seeing. And it should become more widely held and more stable. So like, I'm not sure if now will cycles exist? I mean, I'm not going to bet. I'm not going to say this is the last cycle. I don't know, but I would like to see Bitcoin higher. I would like to see some equities, some publicly traded equities get on the blockchain, like legally. I think that's like, I mean, I've been hearing about tokenization for literally 10 years. We were looking at it once. I think when I first talked to you, we were both looking at there was all those companies, and some of them have done well. There's Securitize and Republic and that are still here, but remember there was like dozens of these platforms for doing this. And we were joking, there was more of these token issuance platforms than there were token issuances. Mm-hmm. We're still kind of there, like RWA, quote unquote. There's a decent amount. It's a trend, no doubt. But that's mostly just like opportunistic TradFi yield trying to serve crypto money that wants TradFi yield on chain. It's not like no one in public boardrooms or on Wall Street's like, oh man, we need an AMM for this. They're all well served by the current financial system, right? I'd like to see somebody come up with like a true 10x experience that's better, because I believe public blockchains are better ledgers for ownership of assets than anything we've ever seen. So like, why should it be like where is my Apple stock? Where is it? I don't know. It's at Fidelity? No, it's not. It's not there. It's Fidelity has a claim on it in my name. I mean, and there's legal structures like protecting me here, and regulatory rules about how that has to be stored. And
we don't want people to hold the stock certificate on their phone.
Not necessarily,
like a bearer asset.
But I'd like us to be able to know directly. Like think about things like short locate or blue sheet reporting. There's all this stuff that you have to do that's literally just like send a CSV to FINRA or like how do we know they did the short locate? Often they don't. They're required by rule, but like can't prove it. Like they should be using in their infrastructure this stuff. I'd like to see that happen. I don't know. I'm making up a bunch of things now, but these are a couple good ones.
I think it's a great list. Where can we send for people to find you on Twitter? And then also, where can we send them to listen to the podcast? Which
Galaxy Brains.
You got
to come online
with a freestyle.
Yeah, Galaxy Brains, great podcast. Galaxybrains.io, or just Google Galaxy Brains. I'm Intangible Coins on Twitter, and you can read all our stuff that's public, galaxy.com/research.
You guys do a fantastic job, so I appreciate you putting it all out there. I like to take your charts sometime and put them in the letter that I write, and then I give you a little hyperlink, and I say, look how smart they are. So,
there you go. I appreciate that.
All right, we'll do it again in the future.
All right, thank you, my friend.